Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. We're recording this interview on Monday, July 7th, 2025. The US dollar gold price has rallied a little bit. It almost got down to $3,300, almost dipped below that. It's subsequently rallied on the passing of the big, beautiful bill to almost $3,400. Again, the silver price is above 36. Today's special guest is a returning guest, like I said. He published a book on mining stocks, how to invest in gold and silver, a complete guide with focus on mining stocks. He also runs the largest and most extensive database for junior gold mining stocks and producing gold and silver miners, Gold Stock Data. Don Durrett, thank you for joining me again.
Hey, Jason, it's good to be back.
So, Don, before we talk about some of the mining companies and maybe some of the mergers and acquisitions, and there was another large deal today with Sandstorm Gold, a huge buyout offer, and that might not be the end of it. I mean, there's rumors that Franco-Nevada may also come in and put in a bid too. I want to get your thoughts on gold and silver demand right now. Do you think that the central banks are the ones that are driving most of the gold demand?
Um, yeah, the central banks plus China plus India. I think that you can point a finger there. I mean, we saw the GLD it go down, so it definitely wasn't the retail investor buying gold and silver. Um, but the whole gold, demand, the whole gold sector, it all started to change when after 2020, after COVID, when the US government and the Fed just started printing like crazy, and you just explosion of debt, you had the interest rate, then you had inflation in 2022, and then you had interest rates just go up, and you had the annual interest payments by the government go to $1 trillion. I think all this stuff is related. I really feel strongly that we're kind of in an in-game scenario here, and gold's kind of sniffing it out. In-game in that the U.S. global hegemony is ending, where the U.S. basically sets the terms for international trade, and the dollar gets not devalued, but de-dollarized, where countries are holding less dollars. They're not buying as many bonds. This is kind of, I think, an end-game scenario here. So gold now, it's changed. The whole dynamic of gold since COVID, since 2020, has changed, where gold now is perceived as something, as kind of a must-own asset. It's a buy the dip asset now. If gold goes down, buy it because it's just going higher.
Now, you talked about endgame and de-dollarization. I mean, I think de-dollarization is more complicated than a lot of people in the gold and silver community and Bitcoin community let on. So I think the main thing that people are staying away from, especially foreign governments, foreign central banks, it's the US Treasury bonds. So they're still using the dollar for like cross-border trade settlement, but what's toxic or radioactive now are US Treasury bonds, and you could see this with the yields, Don. So I think the macro trade is that these foreign entities that are like sovereign wealth funds, foreign pension funds that are large, foreign insurance companies, foreign central banks, they had little to zero gold exposure. And really, since the last 3 years, you've just seen a huge paradigm shift, especially with the Russia sanctions and the budget deficits that are happening here in Washington, D.C. from both political parties. It's just a paradigm shift to where these other entities are deciding they don't not want to be buying and holding treasury bonds, because it seems like we're back, in the 1970s, certificates of confiscation type of policy.
Yeah, I agree with everything you said. Paradigm shift is a good way to use it. I think it is a paradigm end of era situation here, and I think Wall Street has it wrong with this so-called U.S. Uh, dominance, global dominance. I forget the term they use for global, where we dominate the world economically, with our economy and with our dollars and with our bonds. I think Wall Street has it wrong. And the reason why I think they have it wrong, so Wall Street thinks that everything's fine and that we're not going to have a recession and that 2026 is going to be better than 2025. And there's nothing to worry about kind of mindset right now. I think that's completely wrong. I think we're heading into a recession, and it's kind of a train wreck, slow motion train wreck right now.
Well, the dollar is down a record amount in 2025. It's down over 10%. It's off to its worst start in multiple decades, like 3 or 4 decades, something like the 1970s, I think. Worst
Ni-
start. But do you think then that it's the weak dollar that's causing the stock market to go up? Because you said Wall Street is saying everything's great, but if the stock market's going up for non-fundamental reasons, say for just a weaker dollar, then that's a red flag.
Right. Yeah, there's a lot of cash floating. They printed so much money, and people are are chasing yield because we have high inflation. So the cost of living has went up. So it's harder to get ahead when you have inflation. They're saying that inflation is like 3%, but it's probably higher than that. And so people are trying to get ahead, so they're investing in the stock market, and people don't trust bonds, like you said, because the long end of the curve, the government doesn't have much control over the long end, like from 10 years up. And that long end is under pressure because of all the debt. The bond market is starting to become fragile. And so the one thing that we're seeing it all kind of come to a head, but it's hard to connect the dots. I mean, you can't just, you know, totally understand it. All you can do is have conjecture and have a thesis. And so most people, they kind of want the easy street, the easy answer, right? And the easy answer is, GDP is positive, unemployment's at 4.2, people are making money, and so they look at those numbers and they think everything's fine, but they don't look under the covers and they don't really connect all the dots. And if you add all the dots up, if you look at all the positives and all the negatives, I think the negatives outweigh the positive by a significant amount. Now, so if we look at those negatives, the negatives are the cost of living is kind of out of control for the U.S. middle class and lower class, where they're behind the eight ball. They can't afford. Their budget is under pressure, and that budgetary they're I'm talking about home finances are under pressure, and they're not getting better anytime soon. It'll take 2, 3 years for them to kind of get out of a hole here, and then it goes up. I mean, you're looking at, so that's the 50 percentile, but if it actually goes up to the 60 and 70% percentile where the budgets are under pressure, which aren't getting better. So there, and the economy has been slowing since, I think you could go all the way back to 2000, after the dot-com bubble busted, and then 2001 we had 9/11. Since then, the U.S. economy has been under pressure. Now, the 1990s were great because we had all this technology that was expanding and creating all this productivity improvements. But once we got to the 2000s, it was a whole different story. We started spending money on the wars in Iraq, and Afghanistan, and basically having these huge budget deficits, these huge, just letting debt just explode. And then we went into MMT, where we started controlling. We're spending money, but then we took interest rates down to zero, which was ridiculous. So we've been having this manipulated economy for 10 years. And simultaneously to all that, we've had this Triffin's dilemma that's been unfolding. And you could say that's been unfolding since 1980. I mean, maybe you go back to 1971. But Triffin's dilemma is just the whole middle class getting hollowed out with the manufacturing sector, where we stop making things, we stop generating income, and we start living off of debt. And I think that's all coming to a head.
The macro situation is just a bunch of cross currents as you just described. Did you happen to see the Bloomberg article that came out in the last week? It was interviewing, I think, bullion dealers in the US and also like people that owned a lot of gold and silver, and people were being forced to sell. I mean, they needed the cash. That's how bad things are. So people besides Costco, because I think Costco actually is the only gold, they're not a full bullion dealer. So the Costco is like the only company that's actually having like record gold sales. The other ones are struggling with profit margins and sales. It seems, Don, that a lot of the people that have owned gold and silver the last 10 or 15 years here in the United States, they've been net sellers. And then that metal, it gets melted down and it ends up at a premium in kilobars, either in a central bank vault or in Asia.
Yeah, well, we know they're net sellers in silver. If you ask a coin shop, even today, silver's at 30, almost $37, and they're still net sellers. And they were extreme net sellers, sub 35. It was like 5 to 1, 7 to 1, 10 to 1 sellers to buyers, and when silver was below 35 in the last year. As the cost of living has went up, people have been selling their silver because they don't have any money, they don't have any savings. So that's their savings. Their silver was their savings, and they were selling it. And so that just shows you that we have a slowing. We definitely have a slowing in the economy. And now Trump with his tariffs, those are taxes. And I've been saying this that tariffs are bad, they're not good. And Trump's trying to spin it that tariffs are good for the country. Well, in theory, they could be good in the long term because we could bring back some jobs. He could force like Japan and Germany to make more cars in the United States and bring back more jobs that way. Force them to maybe make TVs and phones here, computers, appliances. In theory, if they have a 25% tariff, which is kind of what he's trying to throw on them, then a 25% tariff, it makes more sense to make them here. Now, but that doesn't happen overnight. It's kind of a long term. In the near term, it's a tax. It's a tax on the consumer, and the consumer is already strained. I mean, that's the key word here. The consumer is strained. The consumer can't really handle any more, pressure on their monthly budget. And if Walmart starts raising their prices, that's going to be a tax on the consumer. And I think that Trump's playing with fire here with tariffs. And I've said that he's going to do this. He's going to create a trade war. He already created one with Canada 2 weeks ago. He basically broke off negotiations with Canada. And now today he said he's going to send out a letter to Japan and South Korea. Now, isn't that interesting? Japan has been one of our best allies in Asia, probably our number one ally in Asia. And Trump's picking a trade war with Japan. It's a really bad omen.
And
And if
Japan
he
owns a lot of treasury bonds too. And they didn't they
can,
threaten as a negotiating tactic. I don't know if they'll actually do it, but they did threaten to potentially sell more treasury bonds.
yeah, this is where it gets complicated. You mentioned that before, that the whole macro picture has got all these cross currents. Absolutely. And Japan, you're right, they have $1 trillion of our bonds, and China's down to 750 billion. At one time, China was around 1.3 trillion. And now they're down to 750, going lower. And when China gets below 500 billion, I'm just throwing this number out there, but they get down to about 100, 500 billion. At that point, Japan is going to have to sell because the way that, their cultures work in Japan, you can't look bad. You have to, they can't be left holding the bag. Whoever gets left holding the bag, they're going to look bad, right? So they're going to have to protect their reputation, if you will. So it's like, oh, wait a minute, we can't be left holding the bag. We got to sell too. So Japan is going to start dumping their treasuries once China kind of kicks it into gear, if you will. And China's been a steady seller. So the whole bond market, the reason I got into gold mining stocks, is my belief that the US bond market would eventually first become fragile, which is we're just about there, and then fail. And now, what does failure mean at the bond market? Failure means that the US cannot borrow what it needs. So let's say that the US needs to borrow, and like today it needs to borrow 166 billion. Actually, it's more than that. They have to borrow more than that because they have to roll over the debt. So if the Treasury let's say that the Treasury needs to borrow $300 billion in 1 month, and they can't, right? It fails. They can't borrow that much. Once they can't borrow that much, then the Fed has to come in and monetize that debt, and then the Fed has to be the buyer of last resort. Once that happens, everybody will know it happened, and then everybody will start selling their bonds, and that's when you get a doom loop, a negative feedback doom loop.
Well, we're not quite seeing that yet, where the Fed's official balance sheet is expanding, but there's all these weird accounting tricks, right? Because hasn't like Scott Bessent, the Treasury Secretary, he's talked about potentially like the Treasury doing something like that, monetizing debt, where the Fed doesn't expand their balance sheet. Not exactly sure how. Maybe it's off balance sheet special purpose vehicles. We've seen in the last week, didn't the repo market started to spike again? That means some bank is in trouble. We've had warnings from Jamie Dimon, the CEO of JP Morgan, and they're a primary dealer. He was warning the Treasury not to change the accounting laws and start stuffing the banks, like even the large, too big to fail money center banks, the five or six ones, with way more treasuries. I think like it's only a 10% requirement now for them to hold treasuries. They were talking maybe 30, 40% of their
Yeah.
capital putting into like insane. And Jamie Dimon's warning against it. Don't do it. Don't do it.
Yeah, the so-called SLRs. So they're changing it so the banks can buy more treasuries. The banks can become a customer, but that'll just weaken the balance sheet of the banks. So it's kind of a dangerous scenario. Um, but you're right, it hasn't happened yet. My point is that we're getting if we it's probably not going to happen until we go into a recession. But once we go into a recession, At that point, you're going to have fewer the liquidity. You're not going to have as much liquidity, and you're not going to have as much buyers, and you're definitely going to not have enough foreign buyers because once you go into recession, then everybody's going to be thinking about how bad that recession is going to be and what kind of black swan's going to occur. The black swans actually, I think, will happen after the recession begins. That's when you start to see the bankruptcies. That's when you start needing the bailouts.
Well, we're seeing the repo spike. That was a warning from 2019, so that may be it. Jerome Powell's refusing to cut interest rates. It seems like that's heavily politicized. I mean, I think after his first couple of months as Trump's Fed chairman in the first term, he became a never Trumper. So he should have cut interest rates depending upon certain data points. I mean, there's a lot of signals that he should have cut interest rates. Him keeping at these, it's going to hurt the banks. Doesn't Bank of America, don't they already have around $100 billion of treasury, over $100 billion of treasury losses if they mark to market them? But I don't think they're marking to market the losses.
Yeah, it's in the banking industry. Yeah, there's a few charts out there. It's in the hundreds of billions that they're underwater. Absolutely, and that's not gonna those aren't going to clean up, if you will, because rates aren't going to go back down um, to where those rates were. I mean, I think the Fed funds will go down to about 2.5, but I don't see anything going much lower than 2.5, and then it'll probably start trending back up. After, in other words, they'll take it down as far as they can, and then the long end of the market will start going higher, and then they'll have no choice but to raise the rates back. So I
This
think.
let's change the topic now to silver demand. So the silver price, what it was stuck in the mid to high 20s for over a year. Do you think that the demand spike is that from what solar panel demand or investor demand in China and Asia?
That's a very, very difficult one to put your hand to really understand what's driving silver above $35 here and what drove it up to 35 and got it above 35. Is it industrial demand or is it investor demand? Because we're seeing both. Is it a combination of the two? Because we're seeing a lot of deliveries on silver. So there's and usually the paper market tries to control the price, but if people are taking a lot of demand, a lot of deliveries, then that makes it hard for them to control the paper price. So it's hard to really say what is really pushing silver here above 35. I know the paper price is really what drives demand more so than industrial demand, but we haven't really seen a ton of retail. I think the deliveries are more institutional. I'm pretty certain that it's more institutional deliveries than it is retail deliveries, because the only place you can really take delivery is either at the COMEX or SLV, and the only people that can really take delivery are the big players.
Well,
Because
hasn't India imported a lot more silver over the last couple of years than they have in the past?
yeah,
So I think like there's just huge net import increases for retail investors in Asia for gold, silver. Some of the capital that would have went into gold the last like 4 to 6 weeks, some of the Chinese and Asian retail investors they've started allocating to silver, platinum, and palladium. I think that's where we're seeing rally in these other metals too.
yeah, you could be definitely right that it's the retail in China and India that's pushing these prices higher. That's a good take. I mean, I can't really push back on that. I think that's definitely having an impact. That could be the reason we're above 35 here. But my feeling, and I get a lot of pushback. A lot of people say that I'm the most bearish bull. That's what they say. And because I'm always saying that gold and silver, in order to really have a true bull market where you have silver, gold, and the miners, all three of them kind of having a bull market, they're all running, if you will. The only way that you really get that, I mean, historically, is when the stock market is stagnant. So if you look at the 1970s, the stock market did nothing. It was stagnant, and the miners and gold did extremely well. And then the same thing happened from 2001 to 2011. And so you basically had economic crises in both of those decades. And those crises made the stock market lethargic. And that's when you had, gold outperforming the market. And so right now, last year you had gold did extremely well, but it did not outperform the Nasdaq. And so the miners were up about 100%. The HUI, not fully 100%, but the HUI went from 200 to 400 from like February of 24 to February, and maybe not February this year, but we had a very, very strong run in the miners, and the miners are outperforming the S&P this year by substantial numbers. I think the miners are up like 50% on the year, and the S&P is only up 7%. So the miners are we're starting to see the beginning of it, absolutely. But we still have what I believe is, I still think that this is a bull trap for people that are buying the miners at this time. So if you're loading up on miners as we speak today, you're thinking that silver's getting ready to rip here to 40 and it's at 30, almost 37, and you're buying miners, hands over fist here. I think it's a bit of a bull trap, and same with the gold miners. And the reason why I think it's a bull trap is because I think we're going to see $32 silver before 40. And so that would be a significant correction. And so if you bought miners today and then silver went down to 32, you'd probably be down 20%, maybe 25.
Yeah,
So
but maybe some of those miners, the larger miners that have free cash flow, paid off all their debt, have good profit margins still, maybe they're going to come in and they're going to buy the dip and they're going to go do acquisitions because that seems like the mindset now from talking to some of these companies out there, Don. It seems a lot of the producers are waiting for that dip that you're talking about, and then they want to go in and go buy assets.
Um, possibly. The one thing about this whole industry is that they tend to be somewhat conservative, if you will. And for instance, nobody bought a Vino. Vino was under $100 million, and I thought it was like the buy of the century. And it was easy to buy. That 80% of their shares were retail. I mean, anybody that wanted to buy it could have bought it, and nobody bought it. And now it's at 500 million. And it's like, so nobody really wants to buy when silver prices are low. So if silver prices go back to 32, they're like, they won't be excited to buy. Nobody's thinking in terms of $50 silver. If they were thinking in terms of $50 silver, they would have bought a Vino. But I do think there will be a lot of consolidation, but it won't happen until you get to $40 silver. In other words, we need this. Now, I'm very bullish. I'm fully invested. I'm not waiting for this dip. I'm just saying that I think we're going to get a dip because of these tariffs. So that the stock market's overvalued, in my opinion. The stock market's going to get corrected here at least 10% in the next 2 months. And when it corrects, gold and silver are going to go down with it. That's all I'm saying. I'm just saying that a correction's coming, but I think the correction will be very short-lived. I don't think silver will get to 30. It might get to 31, and I don't think gold will go sub 3,000. I think it'll go to 3,100. So my target is 3,100 gold, 31 silver. But I think that correction will be very short-lived. It'll be a buying opportunity, but it's not like we're going to get rug pulled, and this isn't 2012 all over again, 2013 all over again. This is going to be a very short correction, and then gold will bounce and head to $4,000 and silver will head to 50. So the big move in silver's coming, but it's coming when the stock market basically rolls over and dies.
And also, I think you what talked about 2012 or 2013, the U.S. national debt. It was like it was sub 10 trillion. It was maybe 10 trillion, if that, with the QE programs. And here we are. We're about 37 trillion right now. I think
Yep.
we just crossed 37 trillion. You add in the big beautiful bill, which I don't agree with the CBO estimates. I think the CBO is going to be really wrong. They were really wrong, as my good friend Aaron Basil, who does This Week in Charts, he was reminding me about their projections for Obamacare, and they were off by I think over $1 trillion for their costs for Obamacare and some of the other programs. So
Yep.
I think the big beautiful bill estimates are going to be wrong. If you're another foreign central bank, you're a foreign pension fund, you're like, why am I buying treasuries? Don't I own
Yeah.
too many treasuries? What's
Right.
the US, what is DC and the federal government going to do with their spending problem and all the treasury debt? And you're like, well, I don't think I own enough gold. It's time to increase my gold exposure. I think that's the attitude we have right now.
I think you're spot on. And this is what, I think Wall Street has wrong. And the retail investor, like right now, the retail investor put $150 billion into the stock market this year. And the retail investor is just chasing the stock, chasing that trend, and
Nvidia, yeah.
and believing that all the stock market does is go up. It reminds me a lot of the housing market from 2003 to 2007, where everybody's is just jumping in and just bullish, 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 and we're heading to a train wreck. And your analysis of foreigners basically losing their appetite for our bonds is, I think that is the key to it all because we live on debt. Our bond market relies on foreign money. We cannot self-fund ourselves. We cannot self-fund $2 trillion. It would just suck too much money out of the economy. It put us into a serious recession. We need foreign money, and if the foreign money isn't there, this reminds me a lot of Japan, 1988, 89, when foreign money was funding had because the Japanese stock market was doing unbelievably well. It went up to 45,000. You had all this foreign money was flooding into Japan because Japan was a juggernaut in the 80s. And then what happened in 1989? All the foreign money left, and that foreign money never went back. It was like a vacuum. It just sucked out. It just sucked out of Japan. The same thing is going to happen in the U.S. So the U.S. has the stock market is like over 60% of the global stock market, and 20% of that is foreign money. And about half of that money is going to, you're talking about $5 trillion is going to suck out of the U.S. And that's going to crunch our valuation, and it's going to die. It's basically going to go down to 4,000 on the S&P, and it's not going to go up.
I
Um,
don't know about that, Don. I mean, if the dollar keeps getting weak, and it seems that, in my opinion, President Trump and his Treasury Secretary want a weak dollar, so they're getting a weak dollar. I don't know the amount they want, but they are getting a weak dollar, and that's helping to fuel the stock market going up. But it's crushing the bond market, so they're not getting everything they want. Um, I think we could see a nominal rise in the stock market on a weak dollar, but that's not a good thing either for small business, regular Americans. Because they have, like you said, stagflation, they have higher costs, input costs, they have the tariffs. Their standard of
yeah,
living's being crushed if they don't own a large stock portfolio.
that's possible. The key is going to be how severe the recession is. And I think the recession is going to be severe because I believe there's going to be a lot of black swans around liquidity, and there's just not going to be enough liquidity to keep everything going. I think there's going to be a lot of bankruptcies, a lot of bank closures. I think it's going to be a lot more harsh than people anticipate. And that's why I think the money's going to flow out of the stock market. I could be wrong, but I do think the dollar is going to crash. I agree with you. I think it's going to end the year about 95, and then in 2026, I think it's going to go back to all the way down to about 85. So I think I do. I mean, I am in the dollar crash.
Well, I don't know about a dollar crash down, but I mean, like, it's down a record amount. I think like 11%, give or take, so far this year. That's the worst start for a year, I think, in 3 or 4 decades, something like that. So, I mean, it seems like a managed decline, and that's what the people here in DC at the Treasury Department, President Trump, it seems they want a weaker dollar. I don't know how weak, but they want a weaker dollar.
Yeah, they do. That's all part of the whole tariff strategy. The tariff strategy is to bring manufacturing back, and the only way you can make stuff is if your dollar's weak. So yeah, it coincides directly with Trump's strategy. But I think it's going to basically, they're not going to be happy when it gets, say, sub 95. It gets sub 95 in the DXY, they're not going to be happy, and then they're not going to be able to control the downtrend. And the reason why the downtrend is going to happen is because you're going to have countries dumping our bonds and dumping our dollars. The de-dollarization is going to basically kick into gear, I think. And then the other thing that's going to happen is they're going to print more money, and as they print more money, the dollar is going to get weaker. So you're going to have, that's kind of the trifecta effect. More printing devalues the dollar, and then lower rates devalue the dollar, and then dumping the dollars, dumping the bonds. So you're going to have this, it's
Bad
a
feedback loop, it
perfect
sounds
storm.
like. Yeah, it doesn't
Perfect.
sound, you're not making a good case, Don, for a rally in US Treasury bonds.
Treasury bonds are toast. They don't have a chance. There's basically because inflation's not going away, and so the long end of the market's going higher. You're going to go over 5% on the 10-year, and it's just a matter of how long it takes to get there. But that's where it's going. It's trending towards above 5% on the 10. So I think the 10 is going to go down to about 3.8. That'll be about as low as it gets, maybe 3.7, and then it'll start going back up. all the way to 5 over the next 2 years.
Well, the long bond is still stubbornly high. It's almost at 5. It's still at 4.93% on the 30-year US Treasury bond. And normally, like in a recession risk or anything like that, you'd see a lot of investors start to retreat there. It's not happening.
No, it'll go down a little bit, but I just think that they're going to have to raise the rate in order to have any demand. You're going to have higher rates because inflation is not going away. Inflation is staying with us, and inflation is going to go back higher, just like the 1970s. In the 1970s, you had inflation go up and then down and then back up again. So we're in the back down, and then we're going to go back up again, just like in the late 70s. And they're gonna print. That's the only way they think they can get the recession to try to stop the recession once it starts is to print. And they're going to print and they're going to create inflation, I believe.
Or they're going to lie about the consumer price index and claim that there's not inflation, or they're going to get the OPEC to increase the amount of oil production to help them out. It seems like there's all these games to keep the CPI down right now lately because OPEC just did a surprise oil production increase too. I mean, given the macro cross currents we were talking about, it doesn't seem like, well, why would they increase oil production? So, I
Yeah,
mean, there's
isn't it interesting that the first place he went to was Saudi Arabia, and then they immediately raised their production. Isn't that
yeah,
interesting?
it's a favor. It's a favor for President Trump. Maybe it's a favor. We'll see. I don't know exactly. That's my educated guess that he maybe asked them. I don't know if they agreed to it or not. Maybe give them some type of deal for data centers or Nvidia chips. I don't know. Everyone seems obsessed. All the oil countries, like even Russia, announced that they're going to start building data centers with their cheap natural gas now. That they're going to expand on that too. But I want to ask you because I get tons of questions when I have you on. Like you have to ask Don about all these mic stocks. Okay, so I wanted your thoughts on the mergers and acquisitions so far the last like 6 to 12 months. There's been a lot of deals. What Zijin Mining just did one, Equinox Gold closed on their deal. Do you like all these deals, or do you think that these deals are not very smart?
Oh man, the deals have been fantastic for the silver industry. So first of all, so you had Silvercrest Mining, Coeur picked them up, and so Coeur had a cost problem for their silver miners, and then they basically fixed it. They plugged a hole, and they acquired Silvercrest. When they did that, it became my favorite stock, and it's just been ripping ever since. And then First Majestic had a problem with their cost. And they acquired Gatos and basically plugged that hole, and now it kind of fixed First Majestic. And then Equinox had a a big problem, or Pan American. Pan American had a big problem. They were only producing 21% of their revenue in silver. They acquired Mag Silver, and now their revenue is up to 28%, 27, 28%, and it'll probably grow to 30% as silver prices outperform gold. And it turned Pan American into a silver miner again. And so all three of those companies, it improved them all dramatically, not a little bit, dramatically. And in the silver sector, there's only about 10 silver miners that are kind of quality. There's only 15 with a market cap over $100 million, about 10 with quality. And those three all got fixed, which was a beautiful thing. So I love the M&A. The M&A has been fantastic for silver, for the whole sector, if you will. It's improved the sector tremendously. So the sector it's just primed. It's just primed to really take off. I really like the Pan American deal the best. It hasn't closed yet, but that just makes Pan American just a beautiful stock. I love it. And then
And
the Equinox deal with Caliber. These companies have been making really smart moves. That Equinox was a problem stock, but I owned it. By them picking up Caliber, I mean that really now it didn't fix them yet, but it put them on the road to getting fixed. Ross Beatty has basically been very aggressive on building Equinox up, and by doing that, he's accumulated a boatload of debt. He's got like 1.4 billion in debt, and then his costs are high. He's got an 1850 ASIC. So, but he
that's
basically
mostly Los Filos, isn't it? The high cost mine was mostly one or two mines that were the problem, right?
well, Los Feliz is in care and maintenance. They're having problems with it right now. It's not even in production. So the reason why they have high costs is because they've been very aggressive, which I like. I like the aggressiveness, but they've had a lot of debt, a lot of high costs, and it's like build a mine, get it built, whatever it takes, kind of thing. Aggressive, very, very aggressive. So Ross, he said, I'm going to build a major. and I'm going to build, and he's building it kind of really, really quickly. But by acquiring Caliber, now they have these, they got the Valentine Lake mine, Valentine, which is coming online this year. And so Valentine and Greenstone combined, when you combine both of those mines, they both have $1,000 ASIC. So they should be able to get their ASIC
In
down.
Canada, safe place too, right?
Yeah, great. Yeah, absolutely. And so they're also in Brazil, which is, I think, a pretty good place to mine. So they're also in Nevada. So by and large, they have good locations. But I think they're good that ASIC down from 1,800 to 1,650, maybe 1,600. By the end of the year, it's going to be, I think their ASIC is going to come dropping down. And they're a million, they're 850,000 ounce producer right now. That's going to grow. They get Valentine on Lake. They'll be up to, I think, a million ounces by the end of the year. And then they'll grow that to 1.2, 1.3. But the thing is, I like about Equinox is they're a shark. They're going to keep growing through acquisitions. Very good management team with Ross Beatty. They're basically very visionary. I like that. I think they're going to compete with Agnico Eagle when this thing's all said and done. Agnico's like they're like the cream of the crop, and Agnico's an amazing company. They can't do. They have so many projects. They don't know which ones to work on. Which one do we want to go build? They have to prioritize. But Agnico is a thing of beauty. Definitely heads and shoulders above everybody else. But I think Equinox, I think they're going to catch up to them to be that kind of a quality company. I think that Equinox and Pan American, those are the two big companies that are just going to have, 8+ bagger potential. You don't get that with Barrick and the Newmonts. You get, three, four. Agnico, Barrick, and Newmont, you're going to get basically a three bagger, maybe a four bagger at $5,000 gold, whereas Pan American and Equinox are going to get twice as much return. And I'm all about chasing the alpha. It's amazing to me you can get those companies of that quality, that size, with that much upside.
I think Dundee Precious Metals, which had a smaller gold mine, I think they also bought a large silver mine in Eastern Europe. So they went to the silver route too. But there are a lot of good silver projects. Most of them are in Argentina. So do you think that we're going to start to see those construction decisions in the next couple of years?
Yeah, so I didn't even mention Dundee. Dundee took out Adriatic, which turned Dundee into a silver miner. I consider a silver miner is a company that mines at least 25% of the revenue as silver, but I prefer 30. But I'll consider a miner company as a silver miner if it does 25. Like for instance, Santa Cruz. Santa Cruz does 25% silver. Everybody thinks they're a silver miner. But you get that huge leverage because silver is just going to explode in value. But Dundee, they're a 300,000 ounce, I think, gold producer, but they're going to add Adriatic is going to give them 15 million ounces. So if you do the numbers on it, their silver production is well north of 30%. So Dundee is becoming a silver miner with this deal. And they stole Adriatic, literally stole it because Adriatic hasn't been repriced yet, re-rated. Adriatic has just started ramping up production this year. They haven't even reached full production yet. This is what sharks do. Sharks wait until a company is fully de-risked, and then they just start circling, and then they basically go and eat the company. And Dundee, they did it right. I mean, they waited until it was fully de-risked, but they bought it up before it got re-rated higher. And the people that owned Adriatic were not happy at all. The one thing is so Adriatic was probably a 10 bagger all day long, and now Dundee, they're not going to be a 10 bagger, but they're probably going to be a 7 bagger. But you get a better company. Dundee's a lot better management team than Adriatic, and now Dundee can grow, and Dundee's a shark. So yeah, great deal for Dundee. Really like that one. Argentina, you mentioned Argentina, so that's Abra Silver. So Abra Silver. It's a great project, but the problem with Abra Silver, when people don't connect the dots, is their CEO, John Miniotis, I might be mispronouncing his name. He's a finance guy. He's never built and operated a mine. So why is he the CEO? Why haven't they replaced him yet? I mean, they're getting really close to a construction decision, and they haven't replaced him. I just don't think that I don't think they're going to build a mine because he's the CEO. I don't think the board they're ready. I think, I've been following Abrasillo for years, and basically it's John and his right hand man, which he was the geologist, and they're basically just been drilling it out. They've just been drill, right? And so I think they're going to sell the company. Either Kinross owns like 6%. Fortuna is right next door to them. It's perfect for Fortuna because it makes Fortuna a silver miner again. Or it'll be maybe Pan American or Hochschild. Hochschild's they're a shark. So one of those four companies I think will build or buy Abra, and the Abra shareholders are going to be very disappointed unless they also own the buyer. You want to own Kinross. If you own Abra, you want to own Kinross and Fortuna. I always want to own the company that's going to be the buyer. But I do think that deal. Let's talk a little bit about other silver miners who I think are basically in the crosshairs for M&A. I think Endeavor Silver's in the crosshairs because Endeavor, they just got Terranera, and Terranera is ramping up this year, and Terranera is going to drop their cost by 50%, which is huge. Terranera has cash cost of like $1. It's a very economic mine. It's basically gonna make Endeavor Silver healthy again. And then they got Pitarrilla, and then Pitarrilla is gonna add another 5 million ounces. So Endeavor looks really juicy for anybody who wants to take them out. So I think Endeavor is going down. The other one that I think is still going down is Avino. So Avino is at $500 million, but believe it or not, it's still super cheap. So they're like going to be about a 4 million ounce producer at the end of the year. 4 million ounce producer at $500 million is still super cheap. So I think they're in the crosshairs. I think Avino gets taken out. Um, I told the CEO of Mineros, a gold mining company who has a bunch of cash, that to go, it has the same valuation. They're both super cheap, but they're both valued the same. They're both $500 million companies. And he's told me that he thought his company was worth more than Avino. And I'm like, it might be worth more today, but it's not worth more tomorrow. Avino has much more upside. So his company prints like a 10 bagger. Avino prints is a 15 bagger, 20 bagger. But he didn't want to look at it that way. I was looking at it in the future. If you look down the road, because Avino has 350 million ounces of silver equivalent. So they're just going to keep growing production all the way to 8, 9 million ounces a year. Whereas he's only going to grow production from 200,000, 215 today to about 350. So he's about double his production. Avino's going to 4x their production. But he didn't want to look at it like that. That in this industry, they're very conservative. They look 1 year out at the most. That's about as far as they can look. They won't look 2 years down the road. But if you look 2, 3 years down the road, Avino is much cheaper than Mineros.
And then you have the La Navidad project, which I was hoping that Javier Milei, now that he's in power there, would fly into that province and try to renegotiate the deal and tell the people that run that province in Argentina, you know what, that's billions of dollars of value for that silver mine. It's potentially a top five, if not one of the top two or three silver mines in the world. Let's move this thing along. Let's get this thing built. Let's get it approved, especially at like $35, $36 an ounce silver. I mean, it's worth a lot of money in net present value, and it's being blocked right now still. It should get approved. Hopefully, Javier Milei, I know he's free market. Maybe he's listening to this podcast and he sends some of his people in there, gets it done. Because that if they get La Navidad approval, I mean, Pan American Silver, you talked about eight baggers. That potentially could be an eight bagger. They bring on Escoal back from Guatemala. And in addition to what the Juancipio for Mag Silver, that's three of the five or six best silver mines in the world if they can get all those online.
Yeah, that's another reason I like Pan American. I think that either Escobar or Navidad, one of those two, will get built. I don't know which one, but I
Well,
think
Escobar was built, right? But there was like environmental issues, and it's on care and maintenance. I think
yeah,
Escobar was running.
yes, it's on care and maintenance. You're correct. I said built. I meant production. Yeah, Navidad has to be permitted and built. Escobar just needs to be restarted. But they're both massive mines, massive. We're talking 20 million ounces a year silver production. And so either one of those is all Pan American needs is one of the two. They don't need them both. If they get them both, it would be amazing. But I do think they'll get one or the other because there's just so many jobs. I mean, these are just massive mines. I mean, these are bigger, almost as big as Cordero. That's why I think Cordero, which is Discovery's mine in Mexico, I think it will get built because these mines, these are 30-year mines, 30 years. 30 years of, 1,000 plus high paid employees. These are just amazing financial. And then the governments get taxes on top of it. So you get all this employment, they grow the communities, all the taxes. I mean, it's just, they're too big.
Infrastructure, you get infrastructure too. So there's schools and infrastructure. So there's like a lot of investment into the local community too, because the mine companies are not just extracting wealth anymore. I mean, they're investing into the local community. They're training the people. There's roads and power utilities and all these things and schools, all these things that are invested around the mine too.
Right. So let's talk a little bit, you know, you about Mexico and the permitting issue. So last week there was an article that came. It was a press conference by Scheinbaum, and she sounded really negative, and some people think that she said something really severe. She basically said there will be no new concessions, and the way she said it was kind of really, the tone was really kind of negative for mining. Um, but I think a lot of it was political. That she wanted to her environmental base. She didn't want them to get excited. She wanted to kind of throw them a bone, if you will. But underneath the covers, she's not stopping mining, if you will. She's going to give her permits out. And for instance, there was a couple companies. If she was going to not give any, let me back up here. AMLO, the last president in Mexico, did not give an open pit permit in 6 years. Now, that wasn't the way that the law is written in Mexico, that he can't permit, you can't get a permit for open pit mines. That's not on the books. But what he did was, it was kind of a ghost ban, shadow ban, where you can apply, but you're not getting one, kind of thing. And that's kind of what happened over the last 6 years. Now, the thing is that Scheinbaum could do the same thing. In other words, she doesn't have to, because she doesn't have the votes to do it, to enact a mining ban. But she can basically say, look, we're not going to give any new leases. That's what a concession is. We're not going to give any new leases. But let's say that you own a property that has a lease and you're spending money. You've spent all this money to get it prepped and ready for a license to mine it. If she was not going to give out those permits, she's already left these companies hanging because they haven't gotten a permit. They've been waiting, waiting, waiting. If she's not going to give them a permit for 6 years, I mean, at a certain point, there's going to be some legal ramifications here, because these companies are spending money, keeping, they have employees. They're trying to get these things permitted. They have staff. She has to basically say, sorry, we're not going to give you one, kind of thing. We're not going to give anybody a open permit. So I don't think that's going to happen. Plus, Discovery Silver, which is a big project, Cordero. So they have contacts in the government, and they came out with a news release, and they basically said, no, I'm sorry, they didn't. They sent an email to somebody and then that email was leaked out, and they pretty much said, look, we're in contact with the government, and they told us that everything is progressing. Not to worry, it's coming. And we're not worried. We're not concerned. And so, so the government is not basically saying, look, we're not going to give any open pit permits. They're not coming. Forget about it. It's not as intransigent, because back when AMLO was president, they pretty much told them, forget about it. You're not getting one. That's what how everybody understood the situation in Mexico and under AMLO. There's going to be no open pit permits forthcoming. But Avino, under AMLO, they got their open pit permit, La Precocia, they submitted for an open pit permit for that one and they got it. They received it. So underground mining is fine in Mexico. That's not those aren't being held up. So we don't have to worry about Go Gold, their Los Ricos project, which is underground. It'll be permitted. Silver Tiger, they're permitted in underground, but they already have a permit for the underground. So the undergrounds are fine. I'm thinking of another underground mine in Mexico. Oh yeah, Endeavor Silver, their Pitarrilla is underground. I'm not worried about that. So the bottom line is, I'm not really worried about permits in Mexico, although a lot of people are. What I'm worried about is Scheinbaum might, in her 6 years, I wouldn't be at least bit surprised if she increases the royalty rate, the taxes, or maybe implements a new law where they get like 10% ownership. That's what I'm worried about. I'm not worried about the permitting.
So I want to ask you about gold mines that have low costs, good grades, that are either under construction or about to start. Would you say that like Blackwater and Greenstone are two of the best, or are you looking at better ones right now?
Um, Yeah, okay. So Blackwater is a beautiful mine. I own that's Artemis Gold up in Canada. I mean, that one is absolutely, fantastic. They're in production right now, ramping up. I mean, they're going to pay that thing off in like less than 2 years, which was amazing. Greenstone, that's in production, low cost, beautiful mine. Equinox, we talked about that. Let me think about some other near-term producers. Skeena, they're getting closer and closer to construction. That's a low-cost open pit, 2 grams. Love that project. West Red Lake Gold just got into production. I think, their ASIC about 1,600 or so, not super low. Next Gold, they're getting really close. Their ASICs are both fairly very economic. I'm very excited about that. Um, Trying to think in terms of any mines that are within a year. There's not that many. Talisker just went into production this month. They just did a news release. So Talisker is they're doing an offtake and they just went into production. There's not a lot of mines that are kind of near term. I'm probably going to miss a few. Lahontan's 2 years out. Actually, I think they're 2 years out from a construction decision, so they're not super close. I'm going around the horn thinking, where there's some near term. I don't think in Yukon, I don't think there's any projects that are within 2 years. Alaska,
Well,
nothing.
well,
There's
isn't B2's building one, right? So, but
Okay, yeah. B2 Goose is ramping up right now. So that's a good one. Good catch there. So yeah, yeah. B2 Gold, their Goose project is in Nunavut. That one is ramping up as we speak, and that's a big mine. I'm very excited about that one. So yeah, that's a good catch.
yeah, B2 has lagged for while that mine's under construction, the share price was lagging for a long time.
Actually, this is great. I have my database here. I can do a quick search of all near-term producers. This is fantastic. 1 second. It won't take long. Okay, I got 24 names. So let's see who I missed. Okay, so Ascot is out of money right now. They basically they couldn't get the labor costs. So their budget, in order for them to make money, I don't know exactly. They didn't really spell out why, but Ascot was supposed to go into production in July, August, and they put out a news release and said we don't have the money because the labor costs were too high. That was kind of weird.
That's shocking for a gold miner with the gold prices above $3,000 an
Yeah,
ounce to run out of money. It's like,
yeah.
what is going on here? It just shows
Yeah.
you that if you bet on a one
I,
individual mining company stock and
I,
they only have one mine, things that you
I,
didn't anticipate could happen.
I,
$3,000 gold. I mean, this probably shouldn't happen, right?
I really believe that Dolly Varden should have pivoted into production because we're seeing a lot of companies pivot from. We just saw today. We got a news release from Scotty Resources. They were an exploration company. They're pivoting into production. I think Dolly Varden, because they're in British Columbia, they should pivot into production and basically buy out Ascot and build their mine. That's just a thought of mine. Okay, Bunker Hill. Bunker Hill is really close to production in Idaho, but they're kind of a high cost silver miner. It's a spec bet. Exelon just got their Malay. They just got this project in Peru. I think it's Peru. It's called Malay. We don't know. It's small silver project. A lot of people like it. I think it's a really kind of a high risk venture. Um, yeah, there's not. I have Montage. They're under construction, but it's a 3-year build. Osisco Development. They're getting really close to construction. They have a nice project in British Columbia. Um, they're getting closer. Rio 2 is ramping up right now. I think Rio 2 is about a year away. So that one's kind of interesting. Economic. They have some water issues. So phase 2, they got to figure out their water problems. Silver Storm. So Silver Storm starting up production this year. Their silver they bought from First Majestic. So they're going to mine about 2 to 3 million ounces a year, and they're going to take that free cash flow and put it into San Diego. San Diego is another open pit project. Silver Storm is really interesting because of San Diego. I mean, they got a market cap 50 million, and San Diego is worth more than $1 billion. So I like Silver Storm a lot as a spec bet. And then the last one is US Gold. None of these are really super exciting, high free cash flow kind of mines. Those are kind of down the road a ways, development projects. Nothing really near term, which isn't exciting. There's a lot of development projects that are really exciting. US Gold. So US Gold is in Wyoming, and they're about a year out of production. Not super, super juicy, but they have a development project in Nevada that I like. And so they're going to take their free cash flow and drill in Nevada. So those are all your near termers. There's not a ton of them, very few.
Yes, because I think there's been a lot of what joint venture deals for a lot of the juniors for drilling programs. We haven't seen a ton of joint venture deals for these larger senior and mid-tier gold miners announce that they're buying 50% of the mine to help build it and put it into construction. Those happened those terms were what during the bear market, were what Goldfields bought Osisco Mining up there in Quebec and some of those others. Those were a few years ago. We haven't seen a lot of those lately. They've been outright acquisitions. I want to ask you about the laggards. So some of these gold mine companies that have lagged. So what? B2 Gold, Equinox Gold, with some of the operational problems, they're building a massive mine. The market is worried about cost overruns. The mine's not coming in on time and on budget. So you expect then those types of companies will get a re-rating in the stock once the operational issues at the mine that's under construction are fixed.
Yeah, yeah. As gold prices go up, companies that have high cost, bad balance sheets, they really get re-rated really quickly. Their margins go up, so their risk goes down, and as the risk goes down, their multiple is going to go up, and then they get more free cash flow, and it's kind of a positive feedback loop. So yeah, so the problem for B2 though is their largest mine is in Mali, Fekola, and so I don't know. It's gonna take some time um, for their margin for when my investors get a little more comfortable that Mali is not going to keep raising their taxes. So we need to see a little bit more positive feedback on that one for B2. So B2, I don't know if they're going to get a 10 multiple. They might get stuck at a 5. I think right now they're about a 3. So it's hard to say on some of these companies that have, risk areas, what kind of a multiple they get. But other companies, they don't have that overhang and their multiple can really expand quickly. Companies like First Majestic, who, they don't have, super low cost, but you get the $40 silver, and suddenly First Majestic looks really juicy because they have suddenly their margins, they're generating a lot of free cash flow, and their balance sheet starts looking better and better. I think they have like 250 million in debt, so they need significant margins, and then their risk really falls off. Another one is Hecla. Hecla has a bunch of debt, 500 million in debt, and they don't have super high margins. So, but Hecla and First Majestic, those stocks have a ton of leverage once you get to $40 silver and above. Like every dollar that silver goes up from 40, 41, 42, 43, every single dollar, you're going to see First Majestic and Hecla go up 20%. Those stock, and the reason why is because exactly what you said. They're going to get re-rated higher because their risk is going to be improving dramatically. But if you buy those stocks, The downside risk has huge leverage. It goes both ways. So if silver corrects to $35, Hecla and First Majestic, their stock's going to go down, 20%. So you get these huge moves up and you get these huge moves back down. But as long as you get higher highs, you're going to do really well. Um, so, so you can take a look at, I mean, just look at the margins of what their current margins are, and the companies that have kind of the lower margins and then the lower free cash flow multiples. I like to look at companies that have multiples like 1 to 5, because if they have multiples that low at current gold prices or current silver prices, you can imagine the multiples just get smaller, and so they have tons of leverage. So I'm always looking for that leverage.
Yeah, I was looking at the laggards, like two of the biggest laggards for the mining stocks that have precious metals exposure. One of them's Ivanhoe with the problem at their super high grade copper mine with Zijin Mining. And then they're bringing online the world class platinum group metal mine, Platreef, which is almost gonna about to start cash flow. So that, I don't know if you cover platinum and palladium, but that's going to be on paper at least once it gets up to phase two, a world class mine. It's almost about to start cash flowing. That those shares are like cut in half, I think, over the last like 6 to 9 months because of the problem at the mine. So that's like a $7 or $8 stock the last time I looked. So Ivanhoe risk reward looks interesting there. It's a huge laggard. The other one is SSR. SSR would had the huge issue 2 years ago, something like that, at the Chopler mine in Turkey. They're about to
Right.
start construction. I think they have already started some construction on Hot Mountain, which is arguably the top copper and gold mine there. So that has a lot of upside, but like the share price has just lagged enormously for the last
I
couple of years.
I love SSR Mining. I think they have a really good management team. I think they make really good acquisitions. They just acquired Newmont's Cripple Creek mine in Colorado. Newmont's been the gift that keeps giving. I mean, they give Greatland Gold, the Telfer mine, and the Havieron mine. I mean, I can't believe they did that. It's two beautiful mines. And then they gave a mine to Discovery Silver, bought. Oh gosh, it's right on the tip of my tongue. Um, they got a mine in Canada, a big beautiful mine, and then they gave the one to SSR Mining, three nice mines, and then there's another mine that they're going to sell in Canada. Um, so they've been giving away these beautiful mines, but SSR Mining, I mean, I think Copper is going to get restarted. I'm very optimistic Copper will get restarted. That seems to be working its way out. There's no reason why they won't. They'll find them, but there's no reason why. I don't see any reasons why they won't allow SSR Mining to restart Copper, because whoever if they didn't, I mean that mine, they want the revenue, they want the taxes, so. The only thing they take away their mining license and then give it to somebody else. But what are the odds that whoever replaces SSR Mining is going to be, better at mining? It's not going to happen. So I'm confident Copper gets restarted. You mentioned Modern, and we're getting that one for free, really. The valuation right now is, like you said, it's undervalued. So yeah, I like SSR Mining a lot. I like producers. I like cheap producers, and SSR Mining, I like quality management teams without a lot of red flags. SR Mining is a really good one. So another couple others that I really like is like New Gold. New Gold's cautious, keep going down for the next 3 years. New Gold's been really executing well. I like that one. I Am Gold is another one that's been executing really well. Those three companies, and you throw Dundee in there, those are kind of the four really solid. I think you throw Equinox in there. I mentioned that earlier. Those are kind of the cream of the crop.
Well, I really enjoyed our discussion today. It's a very exciting time right now with the metals prices at these levels. I mean, other than maybe that one junior you mentioned that kind of ran out of funds, it sounds like most of the gold and silver miners are doing pretty well right now.
They are. Well, the gold miners have huge margins. I mean, the average margin is $1,000 right now. And so the silver is, starting to follow gold higher. You have a GSR about 90, and the GSR is starting to go down. And so the silver miners are starting to get healthy. I think the silver miners get healthy about $37. So you got, a couple of the laggards in silver is Guanajuato and Silver X. Those two companies have struggled. They've had to do a lot of share dilution to keep their head above water. Another one, Impact Silver, has high cost. A lot of these other companies had high cost. They've kind of fixed their cost. But at $37 silver, 35 is, is okay. I mean, they're making money, but it's not great. But once you get to about 37, I think they get healthy. You get to 40 and above, and they start matching the gold miners. And then you get to 50 and above, and they start passing the gold miners up on a percentage basis. And so we're early innings on the silver miners. The silver miners are all cheap right now. There's only one silver miner that isn't cheap. It's Highlander. Highlander Silver is the only one. I don't understand that valuation. It's this head spinner for me. It's valued over $200 million, and their target was 60 million ounces. It's kind of stunning. But people love the Lundin family. The Lundin family own a big chunk of it, so everybody's chasing the Lundin family. It's like everything they do turns to gold. So everybody, they own it. I want to own it kind of attitude. But that's the only one that's high valued. Everything else is super cheap still. Everything's like five bagger or better. Fresnio is probably another one. It's a five bagger, and it's one of the it's one of the more expensive ones. So yeah, the miners are starting to get healthy. We're at the early innings here of a bull market. I think we need the stock market to roll over, and then we're going to see the HUI. I think it'll double to eight. It doubled from 200 to 400. I think it'll double again, 400 to 800, and then it'll double again, 800 to 1600. I think and so the next move is really the beginning. The first move from 200 to 400 was really a retracement. And then the next move is really the bull market surge. And I think it'll happen. We're at 430 on the right now we're 433 on the HUI. I think once we get to 475, 500, we're going to be kind of off to the races, and you're going to get that first initial rip from 400 to 800, and that's when the bull market is really, kind of clicking on all eight cylinders, and then we'll get that final surge from 800 to 1600.
And as we talked about in past interviews, a lot of these juniors now with higher metals prices, they've gotten their drill programs funded. So now it's about, will they find enough for a mine? Are they going to move things along? And then will they find a joint venture partner? Because unfortunately, I think the banks, a lot of the large banks, are not going to be funding a lot of these mines. So they either have to find a larger miner, a senior or mid-tier miner as a joint venture partner, or they have to sell a sizable streaming deal to help with some of the funding, because the banks are just not going to get involved with a lot of these single asset producers right now.
Well, yeah, I think we can end it on the funding. Let me have some comments on funding. Actually, it's starting to get better, depending on the project. So I've talked to CEOs, and like Kimberly at Lahontan said, she's not going to have any problems funding hers when it gets ready to be built. Another one, Norsemont, I talked to him. He basically said he's going to fund it all in debt. And so the companies that have good projects, they're having no problems. But the companies that have weak projects, they're having a hell of a time. Bear Creek, they can't fund their capex. Silver's at 35, and they can't fund it. And Ascot, they can't raise any money. They're having trouble. And a lot of these companies are still they have to do full warrants for drilling. It's still like pulling teeth right now for a lot of the companies. I know Minova, they need 30 million. They can't find 30 million to restart their mine. So there's a lot of companies can't get the money. They can't find it, or it's very difficult. West Vault, they haven't even tried to fund theirs, so they're waiting until it's easy to fund. No, so it's not easy to fund. And West Vault's a slam dunk project as far as I'm concerned. But so no, you're right. The banks, it's not easy right now to raise money. They're still trying to, it's still like pulling teeth. I know SilverX has had a hell of a time trying to find money. So it's still very, very difficult to find money and to raise money. And a lot of these companies are doing it full warrants. And producers doing it full warrants. We were seeing Guanajuato do full warrant, which is kind of ridiculous for a producer to do full warrants. We're seeing that. So no, it's still hard. We haven't crossed this hurdle of bull market where it's easy to raise money. We haven't got there yet, where it's super
Wait,
easy.
wait, you're saying it's not easy to raise money for drilling and exploration, or are you talking separately for building a mine
Both,
then?
both. It's not easy right now, unless you have a good project. If you have a good project, yes, you have no problem if it's a good project. But if your project is marginal, very, very difficult to raise money. And a lot of these companies they still need full warrants. When things are good, you can do a half warrant, but when they need full warrants, it just shows you. But no, the money's not it's not easy money right now. Ascot's a perfect example. They can't find any money because nobody trusts them. They don't think it's going to work. But it's like, wait
Is
a
that the
minute.
one that's building the mine and was supposed to be cash flow positive by July, you said, and then they just said they're out of money?
Yeah, they started production and they halted, and now they're trying to restart it. And yeah, they don't can't find the money to restart the mine.
It sounds like Argonaut Gold and Mangino were a larger miner is just going to end up owning the project for pennies on the dollar.
Yeah, yeah. And so that just shows you that money's not easily free flowing because somebody could go in there and say, look, give me 25% of the mine and I'll give you the 10 million to restart it. And nobody's doing that. And so no, it's yeah, I mean it's some low-hanging fruit, but nobody wants to step in. But I follow this on a daily basis and we have not gotten to the point right now where money's flowing and it's easy to raise money. I mentioned several companies that are, kind of having trouble raising money. So we're not seeing the easy. It's not there yet, but I am hearing from companies with really strong projects. Today, I interviewed the CEO today of Norsemont, and he said he's got strategic investors lined up. He can pick which one he wants. So the strong companies, yeah, people are lining up but that's it currently. But that's what you see in the beginning of a bull market. The beginning of the bull market, the money's showing up, but it's only filtering into the quality. It only wants the quality. That's where it starts. And then once the quality, and then it flows out into the mid quality and the lower quality. So we're still early innings. I think $40 silver. We're there for gold, but we need silver to join the party. So I think once silver gets above $40, I think money will be flowing. It will be flowing. Absolutely.
And
We're
what was the name of the junior that you just said? Norsemont, did you say?
Yeah, Norsemont Mining. Yeah, I interviewed the CEO today. It's going to come out in about 3 days. It's a beautiful story down in Chile, I believe. Chile or Peru, one of those two. It's a development story. Yeah, he has no problem raising money. Easy peasy. He's got strategic investors calling him off the market cap on this project was $5 million in September, and now it's 41. So it went from 5 to 41, and it's got huge upside. So yeah, so this basically the story got out, and once the story got out, it just started ripping higher and higher and higher. So those are the kind of stories everybody wants to jump in. I want part of it. Yeah, take a look at it. Norsemont Mining.
Okay, thank you, Don. Our listeners are definitely going to appreciate that because I get comments here if they don't get the name of the junior mining stock. I want to thank you so much for your time today. Please tell my listeners more about your database because it is the largest one. I actually have friends who are gold fund managers like Lawrence Lepard, and they recommend you on the podcast here. So they recommend your work, they recommend your database. So for gold fund managers, they manage money professionally. You have recommendations from them too.
Yeah, it's the only database I'm aware of that's that comprehensive. There's 850 stocks. For instance, like if you want to know all the mid tiers in the world, you just say mid tier, click, boom, there they are. Like today, I pulled up all the near term producers, and there was, and it's like, and boom, So yeah, my database is a really good tool. So it's for people that I provide list of companies. I kind of uh, pre analyze them for people so people can do that. But I want you to do your own due diligence. So it's for people to do their own due diligence. I'm not saying I'm not my newsletter. I'm not a lot of newsletters. They'll write up companies, stock pick. I do more, just give you a list and then have you and say, okay, these are the best ones. Go take a look at them. But I really want you to do your own due diligence, why it's called gold stock data. But if you own a gold and silver mining stock and you want to add to your portfolio, yeah, my database is fantastic for that. So thank you for that, Jason.
And your book, what edition is it? The ninth edition? You're
Yeah,
many.
yeah. 10th edition. That's the other thing. So the combination of my website and my book, it's so useful. So my book is a textbook that explains how to understand the risk of all the miners, the producers. So chapter 6 is the majors, chapter 7 is the mid tiers, Chapter 8 is the juniors, and chapter 9 is how to make money, and chapter 10 is how to value them. Those five chapters are just fantastic, and they're all long and they're very detailed. So yeah, if you're going to invest in gold and silver mining stocks and you're not an expert, you need to read my book. You're going to learn stuff.